And welcome to another episode of Expert Speak. I'm Michael DeLon. Today I'm talking with Gary Sinderbrand. Gary, thank you for being with me, sir.
Pleasure, Michael.
Hey, it is going to be a great conversation. Gary and I have become fast friends, I think. He came to me through one of my other friends and partners, and Gary and I have talked two or three times now, and he and I kind of bonded real quickly because of how he approaches conversations with leads and prospects to build trust, and they convert to clients much faster. And I said, you've got to share this with my audience. So that's what we're going to be talking about today. And Gary coaches financial advisors, and he's got a company called Better Path Training. And but I tell you what, I'm just going to let you tell the story. How in the world did you get doing what you're doing today?
It's it's sometimes it's a mystery to me, Michael. It's kind of been it's been a as the Grateful Dead says, what a long, strange trip it's been.
Yeah.
But you kind of always end up where you belong.
Yeah.
Um, it actually just started with me as a young person having an image of kind of the job that I wanted.
Hmm.
I wanted to control my own outcome. I didn't want to have to report to anybody. And I wanted to leave the world a better place. It's something I learned from my
Wow.
dad.
Mm-hmm.
So the brokerage business always fascinated me. Now, for the wrong reasons, at least initially. I thought it was a way to set my own hours and make a lot of money, not realizing what I was going to get myself into. I
Mm.
was really fortunate at age 24. I got hired by Merrill Lynch in Atlantic City, New Jersey, as a fresh face, what did they call us back then? Account executive rookie.
There you go.
Uh, 1 month of product-based training and a desk, a phone, and good luck. And the washout rate then was about 9 out of 10. I
Wow.
somehow survived into my second year. First year was tough. Second year, I started to get it figured out and noticed that I really started to have success when I talked less and listened more.
Amen.
And I found that the more I could ask questions that would elicit open-ended answers, the more I learned. Now, so a lot of times I wasn't learning exactly what the question was. I would ask a question such as, if someone answered the question, but I wasn't quite sure I got what I needed out of it, I would come back and say, I hear what you said. Can you expand on that a little bit? And then new information would come out. And I found the more people got to express what their fears, needs, goals, dreams were to me, the more we seemed to get along.
Mm-hmm.
And there seemed to be this bond that would build if I talked less and they spoke more. I guess they kept expecting that I was going to come out and try and sell them some great idea or whatever the case may be. But the reality was that it put me into a mode of becoming what I would call an active listener.
Yeah.
And also recognizing that in conversation, in the normal discourse, it's you talk, I talk, you talk, I talk. I started to just kind of go silent and I called it riding the silence. And I
Hmm.
would just look that I was interested and people would then add additional things to it. And it was fascinating to watch it develop. Um, as a result of this new approach and listening to what clients were most or prospects were most afraid of, I started kind of putting together what would now be called financial planning. No one was doing it back then.
Okay.
I started to plot what the outcome clients wanted and where they were currently. We call it the A to B approach. And then I would say, okay, so here's what you're doing. And if we keep going in this direction, your goals are here, you're going to end up down here. But you want to do is you want to end up here. Is that correct? And they'd say, well, yeah. And I'd say, fine, here's how we do it. And I'd show them the math and
Mm-hmm.
demonstrate why it would work. And I started closing an extraordinary amount of business. About
Right.
8 or 9 years in, senior management came to me and said, we notice you're not doing everything we taught you to do. What's up? I said, well, as far as I can tell, I'm thinking, no, no, you're fine. You're doing great. We want to know if you
Yeah.
can teach this to others. I don't know,
Yeah.
maybe. So we put together a pilot program with another advisor that I was we were doing things along the same lines. And that program ended up running at Merrill Lynch for over 12 years.
Wow.
And every couple of weeks, Merrill would fly a group of people into Denver or Jacksonville or Princeton, and we'd run a 2-day program. Then we'd run a follow-up program 30 days later in smaller groups for accountability, and then a 1 hour coaching call after that while I was still managing other clients' money. And that was my career, most of my career at Merrill.
Hmm.
Uh, Left Merrill in '02, went to UBS Private Wealth, and stayed as mostly a producer up until about 2013 or 14. Did a side project, which turned into a little bit of a longer event. Looked to come back in the business around 2018, 2019. Um, I didn't know if I wanted to teach because I really did enjoy it, or I wanted to start managing money again.
Mm-hmm.
And then COVID hit. So I said,
Ah,
well, I'm going to sit still and I'm just going to see if I can work up a little consulting firm, which is what I've done. So
interesting.
a lot of financial advisors I've trained all the way back in my Merrill Lynch days, who are now among the most successful in the industry, are a lot of my current clients. So I work
Mm,
primarily with the large broker dealers. I do work with RIAs as well. And I don't talk to them about how to become better salesmen. I talk to them about how to deepen relationships that they're already showing a natural alignment with, and
hmm.
try and make certain that they're confining their efforts to people that need their help and value their guidance, value their knowledge, value their trust, as opposed to other clients or customers where it's just more of a product sale.
Right.
And clients that have these more aligned client or FAs that have these more aligned client bases, where you say, all right, there's 50 people here, pick out your favorites, and you look at them and say, all of them,
Yeah.
that's a great book. And that's a book that's going to help you grow. You're
Yeah.
not going to stress out. They're going to refer you because they care about you, because they know
Right.
you care about them. And
Yeah.
that's really the baseline of a lot of the analysis I do with the senior advisors I work with. They still have these bifurcated books, and their favorite clients are on one side, people they don't really know that well on the other side. And if they just focus on those folks, that group just expands naturally.
Yeah. It's
So
really,
that's where I focus.
that's great. It's really crazy because what you just said there at the end takes me back to Pareto's 80/20 principle, which is similar. And I've heard that all my life, right? About 30 years ago, it really hit home when I read a John Maxwell book. And he was talking about the Pareto principle. And he's like, the 80/20 principle works if you focus 80% of your time, effort, energy, and money on that 20%, which is exactly what you're just saying is probably talking to financial advisors or really any business owner. If you have 100 clients, probably you don't mesh with, you're not aligned with a fair percentage of them, whatever that number is. And what I heard you saying is they're going to, these financial advisors are going to be much more successful if they could identify who are those. We used to call it right fit clients, but maybe it's a right aligned
Yeah, I
customer.
think you're spot on. So when we look at Pareto, Pareto is doing a quantitative analysis. The
Mm-hmm.
numbers say this and that. That's consistent.
Yeah.
In fact, when I do my analysis, the first one I do is based quantitatively.
Okay.
I look at where is the persistence of the business coming from.
Yeah.
And I divide it in thirds and I color code the thirds.
Yeah.
And at the top, it might be blue, in the middle, it might be green, and the bottom might be orange. But then I go through and I do, against that, I do qualitative measurements. I measure the quality of the relationship and I
Mm.
measure the client's propensity to refer,
Yes.
because you're not going to get referrals from people you're not aligned with. Now,
That's
what
right.
that means is that you could have someone that might be in your second or third tier of productivity. They might be in that 80% of the client base that's not giving you a lot of business, but it's a high quality relationship
Yeah.
and they introduce you to great people and you really like them. So we don't necessarily just ignore them because they don't give us the same amount of money as somebody further up.
Right.
On the other side of that, you could have a client that is one of your best revenue generating clients that's a jerk.
Yeah.
They don't tell you the truth. They change their mind a lot. You're never quite sure what you're going to get, right? But they're profitable, current and future, and you don't want a referral from them because you don't want to know anybody that they know.
That's right. Exactly.
They could fall to that bottom non-aligned area. So when I sort it by the scores, quantitative
Yeah.
and qualitative, the colors change.
Yeah.
So we'll see a preponderance of colors, yeah, of in the top third, but in that top or 50% of aligned clients, a lot of times I'm going to see two other colors. I'm going to see mid-tier and low-tier production,
Right.
but there's going to be really high quality ratings. So the 80/20 is going to always break quantitatively.
Yep.
But when you add the qualitative measurement and then I take an average for that particular advisor's book, it's amazing.
Yeah.
It almost comes out 50/50. 50% of the households on one side generating about 90% of the business. And
Interesting.
then 50% of the households on the other side generating maybe 10 or 15% of the business, even though within that, you may have a client that's in like your number fifth most productive client, but you don't like them.
Right.
Fine, give them to somebody else.
Yes.
You're happier that way. You're
That's
feeling
right.
better about all the people you're working with. And if you can get it down, and I did this by accident, you get it down to that core group that you're aligned with, the growth is, I don't want to say it's effortless, but it doesn't feel like work
Right.
because you're serving a group of people you really care about
Yeah.
and they know it.
Yeah.
And it has a lot more to do with, I think, who we are personally than what we may know from a knowledge base.
Dude, I love that. My one of my primary marketing philosophies is people buy who you are more than what you do. And that's you just echoed that in different words, but when I align with you, when I'm connected with you, when I believe in you and I trust you, everything changes. The conversations become easy. It's like, can we go have coffee? Yeah. Oh, by the way, I walked out with another $500,000. I didn't even look for it because uh, that's not what it's about.
No,
And so many times our conversations are forced, are planned and structured with, okay, they're going to say this, so I've got to have this response. And I think that's an indication that you're probably not in great alignment. Not that we don't need to prepare, but I love that alignment word. I don't hear many people talking about that, and you're taking it to a totally different level of really who that advisor is inside and out, and matching them with like-minded, like feeling prospects, clients.
yeah, people that have characteristics that advisor is going to resonate with. You know, it's funny, Michael, when you were on my podcast and we spoke about your background, yours was remarkably similar to mine.
Mm,
You kind of had a number of things you did as you came to where you are now that you started to pull different benefits from that worked for you personally and started to identify, well, there's a gap in this market here
yeah,
that I feel really strongly about, that I'm equipped to be able to go out and help. But not everybody's going to say, "Oh yeah, we're going to hire Michael and we're going to go write a book."
right.
But the people that you resonate with and understand where that comes from, and now the proof cases are there, you're not doing it for people you don't care about or don't like. You're not going to take something on you don't believe in,
That's right.
but that allows for the expansion of this alignment to happen almost naturally because it's got good anchor points
Yeah,
that aren't buried in sales. They're not buried in outcome. They're buried in who you are
yeah,
subconsciously, who you
absolutely.
really, how you approach the world.
Yeah,
I think you and I share a number of traits. One is we want to leave the world better than we found it,
right. Absolutely.
which means I don't want to deal with a client that's just out there, basically trying to be a parasite on other people. I'm not
Yeah,
going to deal with that person.
right.
I want to find people that want to make things better, and then I
Yeah.
want to help them or enable them to do so, similar to you. So there's a lot more here than I thought. Now, with financial advisors, the problem I see is that every single FA that I work with at the outset, with rare exceptions, has this problem.
Mm-hmm.
When you go through and identify it, you just get like,
Hey,
oh man, I know. And what I tell them is, look, I know you've got people over here you care about, you made a lot of promises to and all the rest of it. But here's the issue. The people on the left side in this block that you really align with, you owe them more than you're giving them. Now, they
mm-hmm.
don't know that, and you can get away with it. But the people on the right side over here, they're detracting from who you are.
Mm-hmm.
They're making you do, say, and act in ways that don't align with who you are as an individual.
Right.
Now, if you're only going to give up 10% of your income to take this chance, how much risk do you really have?
Mm-hmm.
And then I
Right.
tell them my story that
Yeah.
I gave up, did the same thing, and almost doubled my income in a year
Yeah.
because I was happier.
Yeah.
I was
Absolutely.
more aware and more alert. So, yeah, there's a lot to being able to only work with people that, as an advisor, you choose to work with.
Yeah. That's good.
And
And let's vet this out a little bit because, or tease this out because I think this ties into the next thing I want to talk to you about in the short time we have left. We may have to have you back. And you said this earlier, you learned early on to talk less and listen more. So let's say, let's unpack that a little bit because let's say a financial advisor has a prospect. Maybe it's referred to them, maybe it's from a lead source, whatever, and they're having this first meeting either on Zoom or on in person. Give us a couple of tips of tactics, whatever it is, to say what should that advisor do, a question or two or something, to be able to talk less, open up that conversation so that the prospect talks, so that they can kind of vet pretty quickly, is this person kind of in alignment for me? Should we be going for that second appointment, or should I be saying, this is really good, great to meet you, Gary, we're not a good fit?
Okay.
Talk a little bit about that.
So let's divide it into two. Let's divide it into suspects and prospects. Prospects are someone that we've identified has a need, has
Yeah.
assets to invest. Suspects, we're not quite sure, maybe kicking the tires and all the rest of it. With a suspect, what most advisors do when they're asked, hey, tell me about what you do, they spout this value proposition. I
Yeah.
handle this, I do that, I work for this, the research is that. And the clients are hearing wah, 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 because they've heard it 1,000 times. The prospects are hearing it.
Exactly. Yeah.
Um, my response normally is, um, I could tell you, but let me ask you a question instead. I assume you're an investor. Well, yeah, I am. When you open your statements at the end of each month and you look at what you own, can you connect each of your positions to an outcome that's important to you and your family? I shut up. I just stop.
Mm-hmm.
Now, the normal response will be, I'm not sure what you mean. Or, I just want to make money. And I'll say, yeah, I never get that.
Right.
Uh, no, my question is, when you invest, you should invest with a purpose other than just quote unquote making money.
Yeah.
What's the money going to be for? And then they'll say, well, to have it. So how much do you need? I don't know. Are you currently employed? Yes. Do you get out of bed because you have to go to work or you want to go to work? And then they're like, I have to. Would you be interested in knowing what the date might be when you go because you want to?
Mm-hmm.
Oh, yeah, that's what I do. And then I stop.
I love it.
And then it's normally, how do you do that? And that turns into the next meeting where I
Yeah.
make I refer to as an investment introduction. This is where I know I'm going to close.
Yeah.
So I have a chart book. It's got maybe 18 to 20 pages. It's got some verbiage in it, but it's just the basic fundamentals of investing, risk management, asset allocation, and mistakes people make in the market, behavioral mistakes, confirmation bias, and primarily recency bias. And what I'll do is, if I'm on Zoom, I'll flip through the screens. If I'm face to face, I'll flip the pages. But usually, about a minute or two into it, there's some text. And I say, just take a look at this and tell me if this resonates with you. Then I sit back and I watch their body expressions. I watch for micro expressions around their eyes. I look for body language to see if they're interested. And they'll read through and go, yeah, that kind of sounds like me. Well, there's my first yes.
Mm-hmm.
Then I'll go one or two more pages and I'll talk, let's say, about risk and return. And I'll say, what does this chart say to you? Can you explain this chart to me? And then I stop and I sit back, and now they're participating. And
Yeah.
what's happening is there's value building in their mind because they're learning something, which is good for them. And from my perspective, they're interested in learning. So there's an exchange of value in that case. I'm getting information from them and I'm learning about them. And I really observe, taking through a few other charts, and I'll say, can you explain these last two charts? I just want to make sure we're on the same page.
Mm-hmm.
What they're doing is they're reconditioning their brain as to how they think about money, because
Hmm.
I'm showing them stuff that it's immutable, it's incontrovertible. All right.
Right.
Time in the market increases your probability of having a successful outcome. Period. End of story.
Yeah.
It's just proven. But it's the volatility of the equity market which drives most people out, and why most people make far less than what even the underlying indexes make.
Hmm.
So the value I want them to understand is that if they come on board with me, it's not because I'm going to give them a good stock or bond idea. It's
Yeah.
because I'm going to take the oversight and responsibility to get them from where they are to where they want to be. This is the process we're going to follow. And
Yeah.
then I push back. I understand it's not for everybody. And if it's not for you, I get it and I appreciate your time. But based on everything you've told me, especially your aversion to risk, my sense of it is you don't have any risk right now. Keep going in the direction you're going. You will run out of money in your 60s. So there's no risk.
I love it.
Well, what's going to happen if we come with you? I can't tell you what the exact number is going to be at the back end, but you're not going to run out.
Yeah.
But you got to follow what I want. Okay, what do we do next?
Yeah.
And I close.
That's great.
Normally, I would close on a first or second meeting. I don't propose a portfolio because clients don't care.
They don't care. Man, Gary, that is
They don't
gold.
care.
That is gold because what they just closed on is I'm working with you. I trust you. I'm going to follow you. Tell me what I need to do. And that becomes probably the third meeting and the fourth. But now they're locked in.
Oh, they're signed by
Is
the usually by the second
boom.
meeting. They're signed by the second meeting.
Yeah, no, that's what I mean. They're
Yeah.
signed
Oh,
up, but
yeah.
now we have the third meeting to understand. All right,
Well, now you
I
bring up
love
a
it.
really important point, which is why this smaller, tighter aligned book makes more sense. This is consistent across every survey you could do. UBS did a survey a couple of years ago for billionaires in the US. What do you want in your investment advisor?
Mm-hmm.
You think low fees, great performance. No.
Yeah, I don't
Uh-uh.
care.
I want investments that connect the things that are important in my life.
Yeah,
And I want someone that knows I'm alive and cares about me. So mechanically, I explain the first part when I sign them, and
yeah,
then I talk to them 8 or 9 times per year. And normally it's just, hey, Michael, I'm thinking about you. How's everything? How's your
yep,
family? How's
100%.
so and so doing in school? I just want you to know you're on my mind.
Yeah. Dude, that is gold. All right, I'm challenging my audience to stop listening, rewind about 3 minutes and re-listen. Dude, no, that is it because I cannot tell you how many financial advisors we've gone through over the course of our married life, 35 years, and they all say, "Well, we sit down annually with our clients." I've never had one
Annually.
sit down annually with me ever. And let alone 8 times a year, but it's just a simple outreach. It's a simple touch.
It could
it's a
be a
text.
2 minute call.
It's a text. It's a call. It's a birthday card. It's not rocket science, folks. Wow. All right. We could go deep for a long time. We really can because you've got the concepts here of how to approach a sales call, a first conversation, and get them to talk more by having, I mean, you have to be confident in where you are positionally. And you have to know that not everybody's a right fit. Not everybody's going to be aligned, and that's okay. And I loved how when they said, "Well, what do you do?" Well, let me ask you a question. I mean, that's one thing I love about reading the Bible and seeing Jesus, man. If somebody asks him something, he's like, "Well, let me ask you," and it's like, what brilliance that is. Some people call it the Socratic method. Great, I think it was the Jesus method. But being able to do that and ask them questions that nobody else has asked them, because what it does is it makes you different in their mind to go, oh, I'm attracted, I'm aligned. Tell me more. Well, I'll tell you what, let's find a time to sit down and I'll explain more. We'll talk and we'll see if this makes sense. Okay, yeah, that'd be great.
Yeah.
Diffused all the anxiety.
Oh, yeah.
You don't have to do all the research and all the presentations and all. It's like this is who I am. This is how I operate. Are you aligned with this? And if you are, let's go down. If you're not, that's okay. Great. Dude, all right, I hope my audience is as intrigued as I am. You've scratched the itch a little bit to
Yeah.
get me to attention. How do people find you? Because I want
So,
people to be able to
okay.
follow you, find you, learn more from you.
No, I appreciate that.
Where
Thank
would
you.
they go?
So a couple of different places. Probably easiest way is LinkedIn. Just type in my name, just type
Okay.
in Gary Sinderbrand or Better Path Training, and you'll see me come up. I publish a newsletter up there. It's supposed to be like semi, every 2 weeks ish.
Yeah.
Sometimes I'll do two in a day, and it goes there. And I cover a lot of different things, not just investments. I talk about AI. I talk about current events and how they might impact investors or advisors. Um, my website is betterpathtraining.com,
Okay.
and there's some good information up there, primarily dedicated. That website is dedicated to the types of services I can offer at a fairly high level. Most of my clients are pretty established, they're very successful, but they all share one thing in common. They want to get better.
Yeah.
So don't call me in to fix a communications problem on your team. Call me in because you want to bring your son in the business and you don't know how to train him to be like you. Well, the answer is he's not going to be like you. He's going to be like him,
That's right.
but we can train him and teach him the mores and the values and the ethics he needs to succeed in a way that dad has succeeded. So they can find that on betterpathtraining.com and also on my podcast, which I'm pretty happy with. You were kind enough to be a guest, titled If the Public Only Knew. You can get it on your favorite podcast platform. What I'm trying to do there is occupy that space between the advisor and the prospect or the client. So the
Hmm.
prospect or the client says a certain thing, the advisor's not hearing what they say, they're hearing something else. The advisor says a certain thing, the prospect or client isn't hearing what they say, they hear something else. I'm trying to bridge that gap
Yeah.
to help advisors communicate better with clients, but also help clients become better clients of the advisor and looking for the certain things and characteristics and behavior they
Mm.
need to find the kind of advisor that they are aligned with. So that can range to a variety of areas, but I'm having some fun doing it and
Yeah.
starting to get a little traction as well. So 3 different places they can find
That's
me.
awesome. All right, I'm gonna grab those. I'm gonna have those in the show notes because I want my audience to follow you, to learn from you, because you speak in a way that not many people are speaking, and you and I are in very much alignment. And you have a more experience in the financial advisor world, but I want my audience, whether you're a financial advisor or not, to understand and to learn from Gary, because what you're teaching, what you're building. Is it's dare I say it's revolutionary, because it is and it isn't. It's common sense, but it's practical common sense. It's things you can take away from this podcast. And the next time you have a meeting with a prospect, ask a question and shut up. Listen. Ask another question
Yeah.
and do that. So I'm going to put all that in the show notes, Gary. Man, I wish we had more time to dive deeper, because you were just scratching the surface, but it's great. And I appreciate your involvement in my life, in my business. Thank you for being a guest on my podcast, and for just being genuine, and being out there to make the world a better place, man.
Really a pleasure, Michael. Thank you very much for having me.